Today learn about hanging man. So this is hanging man is simple. If you see, it can happen on both sides. On a bearish side, well, this side the candle can be green or red. You see it on the right side how it is looking here. So let's learn about this hanging man, how you can unlock the potential to make a big money in hanging man. It may not be 100% reliable. As you all know, you have to take the help of other candlesticks and prior candle moves and the indicators. So let's start the course on hanging man. So disclaimer, no worries, do not consider the examples what we are saying as your investment advisors. Consult your financial advisor, do your due diligence and understand the risks. So just before getting into the things, just understand what is a candlestick. Candlesticks are, I think, couple of 100 years back, Japanese used to trade rice and other commodities using the candlestick pattern. So candlesticks are formed using the open, high, low and close and on a chosen time frame. If you consider this as a 1 day time frame, the high, this is the close, and this is the open, this is the low, this is for the lower chart, this is for the green candle or the day when the price is closed before earlier days close. The same thing for upper shadow. Consider this as a black or red candle. Technically this is the low and this is where it's closed, so it shows like this. So important thing when you're trying to do these things is understanding the hanging man candlestick pattern is, the pattern is looks like whenever, I think you would have seen the movies where people are hanged. So the same way the candle is hanged at the top. So this pattern you have to understand, where it is very simple. If it's a green candle, I think I already showed what is the Japanese candlesticks and what are the upper shadow, lower shadow and the real body, how it is high low for a green or a red or a white or a black candle. So let's come back here. This has a very long shadow. Technically you have to be very keen at looking at this. You have to look at least a couple of 100 charts to understand it. I'll go through a couple of charts so you will understand. This is the downtrend specific. So let's think a stock or an underlying asset is rallying and you suddenly see in a hanging man. Consider there is a downtrend coming up, because markets, they felt like markets are moved up. See, let's think here, the markets moved up and continued, but here unfortunately market boom, there is a selling pressure and it continued with the red thing, so something like that. So the constituents, if you see, like let's start with 1 2 3 uptrend, market is an uptrend, there isn't a gap up, lower shadow at least twice as big as the real body. If you see here, this lower shadow is double or triple the size of the whole real body. It could be bullish, bearish, doesn't matter. Confirmation candle, next candle is technically lower than this. If the candle is higher than this, then the different story altogether. So I think you have to be careful while you are picking up. The another thing I would like to say is, it's a you have to observe, there should be a pre-uptrend. I would go with at least 10, 20, 30, 40 candles depending upon the cycles of the candle. You have to understand cycles of the time frame, so understand that. So you will understand it's a 1 day reversal. Basically it's a low reliability. I'll show you why I'm saying low reliability. Candlestick formation, I think you have already seen that it's a small real body and a longer shadow. I think in this example you can see this is one place, boom, there is a very long lower shadow, and then market fell, but again it's rebound. So the same thing you can see here, the same thing even. So technically you are not seeing a clear up downtrend. Maybe you can keep in a closing of this one as let's think the market's high is 4517. I don't think the markets are closed 4517 after this, so you can keep in a stop loss at this point and you can boom, you can trade on that stock considering this, because there is a huge uptrend almost from July to I think 20 working days, June to July, there is an uptrend continuing, so you can take the chance, and till mid-August you have seen this. So this is the time. I think this is this I think this is the first candle which has given you, or maybe this one is given you the candle which is it's closed below higher candles high. Maybe this is even not this one. I think this is the only one which is closed. So at least here, from here to here, you would have made money, good money. So drawing trend line, you should be good. And you have to make sure that stop losses are very immediate, so it will be very nice, you will not lose money. So recognizing uptrend markets is important. In a bullish market you will understand these things. Interpretation of hanging man, bearish signals, potential reversals, demand drying up for buying, psychological significance, confirmation. Psychological significance is something, market sentiments or results coming out, something has happened. Confirmation required. Next candle actually gives you the confirmation. Identify hanging man patterns, confirm uptrend conditions, wait for the conditions, and just see timing your trades based on hanging man signal. Identify the hanging man, confirm the uptrend, wait for the confirmation, and time your entry based on mostly the next candlestick or underlying indicators, whatever you like. But I would take the both indicators and the candlestick patterns when I am taking the position. Set appropriate stop losses, manage position sizing because risk is more important your return if you have to run in a long term. Use your trailing stop losses, monitor market condition, how things are going. Integrating hanging man in the other technical indicators, confluence of indicators is very important. It could be moving averages, it could be RSI, it could be MACD or support resistance, anything for that matter to say, but make sure you have something backing up your candlesticks. It could be trend line. So in one of the markets, I think they have back tested 68% win rate is there, small cap 62%, commodity 71%, but I would really say you do your own testing before back testing before taking any call on this. So developing a trade plan, define an entry conditions, step stop loss, set stop losses, establish position sizing, time your exits also. Not only entries, exits are also important. Key takeaways and actionable insights, mastering the hanging man, recognizing the pattern, how it is there and how overall how are the things and the formation, incorporating the trading strategies, continuous learning and back testing is important for anything. That's all for today, and thank you for your time. We will catch up in the next candlestick pattern. Thank you. Bye all.